Follow the leaders. This is going to be a shorter section. I consider it a companion section to the section we had on the universe of stocks. This section is going to be on how to screen for stocks while the market is correcting and how to identify leadership stocks. So how do we know which stocks to pick? There's going to be a lot of innovative companies out there. There's going to be a lot of companies to choose from. How do we know which one to pick? The answer is you're going to let the market tell you which ones to buy. You let the market decide, see which stocks are strongest, and then that's the ones you're going to buy. We're not just going to buy any stock because we've heard of it. It's great if it's innovative, it's great if it's a game changer, but that doesn't mean we're going to buy it. We have to also have the component of the charts and the trends, and we're going to let the market tell us which is the stock that's in demand the most. We want to buy the strongest stocks. We don't want to waste our time and our money in stocks that are underperforming. Just because a stock is well known and innovative doesn't mean it's going to go up. So we want to put both ends together. The one end would be it's an innovative company, it's well known. The other end is the technical analysis, which is the charts, the volume, that type of thing. Once again, a well-known company that's underperforming is not a stock we want to be in. We don't want to own it. Let's take an example here. We have Netflix here on the left, and you see Netflix is sideways action here, and then it collapses here. Very, very weak for Netflix. Where Microsoft, in the same exact time frame, is going up. So both of these companies are very well known. Both are innovators, but being in Netflix at the same time as being in Microsoft is a total waste, because at this point here it's dead money, it's just going sideways, and now it's actually going down, where Microsoft from the same time frame is going up. So obviously you'd rather be in Microsoft. How do you know? You let the market tell you. Okay, so you let the market tell you Microsoft's going stronger, that's the one you get into. So your job is first initially to make a list of stocks that you are familiar with, that are well known, that are innovators, and then you're going to let the market let you know which one to pick first by the action of the chart, by the stock that breaks out first. Let's look at another example here. Here's Tesla. Okay, Tesla, very, very innovative company, changing automobiles, but it's in a downtrend here. Here's Beyond Meat. It's going up very strong since May. I think it's around $50, and here it's at $176. So this is very strong, and this is in a downtrend. So even though they're both innovators, Tesla would be a total waste to be in here in 2019, where Beyond Meat can give you an excellent return. Let's look at the 2018 market correction, because this is going to show you how we identify leaders and how we see which stocks have the potential to really make a lot of money. As you see here, in late October 2018, the S&P 500 was well below its 200-day moving average, and it's a 40-week moving average on this chart, which is very similar to the 200-day moving average, and it's about 3.8% below it here. Okay? And you see the NASDAQ here had a lot of selling. So not only is it below the 40-week moving average, it's also, look at all that massive selling, right? So not good action at all on the NASDAQ. Starbucks, on the other hand, is holding up very well. You see Starbucks has been going up since July. Went from 49 all the way up to 59 here and down to 57. So while the NASDAQ and the S&P 500 is going down, Starbucks is going up. Very interesting. And you see Starbucks here has a lot of positive volume, whereas the NASDAQ had a lot of selling here. Starbucks is getting high volume on the up days, on the up weeks, I should say. So this is a sign that Starbucks is really, really acting well here. Excellent. And here's a chart you see of the S&P 500 down here. The line, you can see it's going down, and Starbucks price performance is going up compared to the S&P 500. So you can see Starbucks here is really acting strong. When we look at the weekly charts, these are the same charts that we just saw here, and here we just put them back side by side here. See, NASDAQ's going down on heavy selling, Starbucks is going up. Okay? NASDAQ, now we've moved on to December 2018. The previous chart was from late October 2018. Now we've moved on to December 2018. See, the S&P 500 has really, really fallen off here. Very strong downtrend here. Starbucks is going up, right? So Starbucks is really a winner. As the market is tanking, as things are going terribly, Starbucks is going up. Very strong uptrend here. So this is a sign that Starbucks is a company to watch. It's a company that is poised for a big move higher. And as the conditions improve in 2019, gets further and further away from the bottom of late December 2018, we see Starbucks goes on a very nice run. So this could be predicted when we look at this. When you're in December and October and you see Starbucks holding up much better than the S&P 500, that's a sign to watch. That's a sign to say, you know, Starbucks is showing a lot of strength, because if it can go up in this weak market, what can it do when it's lifted off, when the market conditions are taken away? It's going to really run up. The analogy I would give it would be, I used to play baseball when I was a kid, and they used to give us a donut, and you put the donut on the bat, and when you're in the batting circle warming up, you'd swing the bat with the donut on, right? And then you take the donut off when it's time to go into the game, and now you swing without the donut, and the bat feels so much lighter. That's equivalent to what's happening here. Starbucks is going up, even though the general conditions are very tough. Once the general conditions are lifted, it's almost like the baseball bat where the donut comes off. Now Starbucks is really going to run, and this is what happens in 2019. Let's look at ServiceNow. Same thing here. NASDAQ, a lot of problems here in late 2018. A real downtrend. ServiceNow is going sideways here. So, NASDAQ going down, ServiceNow going sideways. The fact that ServiceNow is going sideways while the NASDAQ's going down, that's a sign that you got to watch it, because this could potentially take off and make a big move. And you see it does. In 2019, it really has a nice strong move higher. So what we do is, when it's December 2018 and you see the NASDAQ going down very hard, you make it a watch list of stocks that are holding up nicely. And then you're going to say, I'm going to keep an eye on them for when they break out, because those can become real leadership stocks, as ServiceNow does. Let's look at Shopify. Shopify, again, same chart from late December 2018. NASDAQ in a strong downtrend. Shopify, sideways action here. Nice sideways action here. Ideally, when you're in a stock, you don't want to go sideways. You're going up. But in this instance, we're not in the stock. We're watching it. So we're watching Shopify go sideways here as the NASDAQ really falls off. So that's a sign to watch it. We're not going to buy it here, right? We're going to have to wait for the breakout. But that's a sign for us to watch this, because we're saying Shopify is not getting hammered as the general market gets hammered. It means people are reluctant to sell it. People are saying, you know what? I will sell my other stocks. I'm not selling Shopify. That's a sign of strength. So when you see something like this, where the general market is falling off and the stock is going sideways, what you do is you take a pen and paper and you write down the name of the stock, and you watch it and watch it and watch it. Because if it breaks out, it could become a massive leader and a massive winner. And this is what happens with Shopify. It doubles. So in this chart here, it's at 138, and up here it's up 330 and still heading higher. So what happens is, like I said earlier, the market holds back stocks. The general conditions hold back stocks. And what you're going to do is you're going to look for stocks that are holding up relatively well. I guess another analogy I could give is, you see somebody, they're running, and they're running, let's say, 4 miles an hour, and they have a backpack on, and the backpack is very heavy. Once they take that backpack off, they're going to really be able to run much faster, because they don't have this backpack on them anymore. Same thing with the stock market. You look at Shopify here, right? The sideways action. Shopify is being held back by the general conditions, which are very weak here. Once the general conditions improve, Shopify really lifts off and doubles. So how are we going to identify these stocks? How are we going to find them? Well, what we're going to do is we're going to screen for them. We're going to use a website called Macro Trends. Now, I talk about macro trends in the section called the Universe of Stocks. And I want to talk about it a little bit here, and I want to show you a different way to do it. You can use both styles of screening. You can use the one in the Universe of Stocks sections, and the one I'm going to show you here how to screen is, you're going to screen this way if the market is very bearish, if there's a correction going on. This is how you're going to screen during those times to identify leadership stocks. So what we're going to do is we're going to look for stocks that are above their 50-day moving average or 200-day moving average, when the NASDAQ or S&P 500 are below their 50-day or 200-day moving averages. So what we do is head on to macrotrends.net, and there's more about this in the Universe of Stocks section. And what you're going to do is you're going to say 200-day moving average here, and you're going to make this 0, and then you're going to screen. Now this is a screen you're going to use if the market is below its 200-day moving average. So if you see an instance like this, where the market is tailing off and really collapsing, what you do is you go to macro trends and you say, I want to see stocks that are above their 200-day moving average, because that means they're holding up well. So you go to macro trends here, and then you're going to put this to be 0, and it's going to only show you the stocks that are above their 200-day moving average. So we do this screen when the market is below its 200-day moving average, because we want to see stocks that are holding up much better. Now, if you're in an instance where the market is below its 50-day moving average, then what you could do is you can go here in macro trends and use the 50-day moving average rather than the 200-day moving average. So that's two ways you could do it to identify leadership stocks while the market is correcting. The other way you could do it is by looking at stocks near a 52-week percent high, which is what we do in the universe of stocks section. So I wanted to show you a variety of ways you could use the macro trend screener, and it's free, of course. It's a free website that you could use. Let's do a case study of Planet Fitness in 2018. Here you see the NASDAQ here. On November 8th, 2018, NASDAQ is well below its 200-day moving average. Planet Fitness, you see, this red line here, it never goes below its 200-day moving average. And in fact, it heads higher here on November 8th. November 8th, NASDAQ still just above its 200-day moving average, still had a very big decline here, whereas Planet never lost its 200-day moving average and had a big move higher here. So I'm not saying to buy it on this day, but what I'm saying is this is a sign to watch Planet Fitness because it's outperforming the general market. It's going up on high volume while the NASDAQ has had some bad action over the past few weeks. So given a sign to watch it. And then you see in 2019, Planet Fitness really takes off. So if you were somebody who had been watching Planet Fitness, you put it on your watch list here in November, and then here in February, you'd buy it probably here somewhere. Probably this day or this day you could buy it. And you see it has a nice run up higher here into June 2019. Now let's look at SPY versus TTD. On December 31st, 2018, you see S&P 500 far below its 200-day moving average, which is the red line. But TTD is holding above its red line, which is the 200-day moving average. You see the blue line, the 50-day moving average, is below the red line here, the 200-day moving average on SPY, but the blue line, which is the 50-day moving average, is above the 200-day moving average, the red line on TTD. So this is a strong stock. The market is really falling off. TTD's showing a lot of strength, holding its 200-day moving average as the S&P 500 is below its 200-day moving average. So this stock would show up for you if you use the macro trend screener we talked about on a previous slide. And you see as the market starts improving here in 2019, TTD doubles. It doubles from 105, more than doubles to 230. So this is a stock that showed it had the potential to really move higher because it didn't decline below its 200-day moving average as the S&P 500 did. And you see TTD continues higher into 2019. Very strong stock. And its leadership was identified by the fact that it never lost its 200-day moving average while the S&P 500 was far below its 200-day moving average in December 2018. So action steps you could take. When the market is correcting, keep an eye on stocks holding up well, such as stocks that are close to a new high while the market corrects to its 50-day, stocks at their 50-day when the market is at its 200-day, or stocks above their 200-day while the market is below its 200-day. So what you're trying to look for is stocks that are underperforming. If the general market, meaning SPY or NASDAQ, is at its 50-day, then we're going to screen for stocks that are close to a new high and talk about that in the universe of stocks sections. If the market is at its 200-day moving average, we want to look for stocks that are at a new high or above their 50-day moving average. And then if you're in a situation like late 2018 where the market is far below its 200-day moving average, we're going to look for stocks that are at or above their 200-day moving average. In this instance, where the market is way below its 200-day moving average, you're probably not going to see many stocks that are breaking out and at a new high. So that's why you're going to have to look for stocks either above their 50-day moving average or 200-day moving average. And you're going to jot them down on a watch list to see if they could break out. Macro Trends is an excellent resource you can use. It's free. And what you want to do is you want to monitor macro trends on a daily basis while the market's correcting. I'm not saying to buy the stocks, but while the market's correcting, I like to go on macro trends and see the stocks that are holding up well. It literally only takes a few minutes. Once the market is strong and conditions improve, I don't really do much screening anymore because I have stocks and I don't have any more money to buy stocks. But while the market is correcting, that's a time to really do your screening and create a watch list. What most people do is they completely forget about the market and they say, it's useless. I'll look for something else to do, right? But that's actually the time when the leaders are being formed and the leaders are showing their strength during the time when the market is correcting. And just the last thing I want to say is we never, ever, ever just buy a stock because it's innovative or because it's on a watch list like macro trends. You got to also wait for the breakout on high volume and the proper setup. So what we're trying to do is we're trying to merge everything together, identifying leadership stocks, and then buying them at proper entry points. You can't just randomly buy a stock because you like it or because it appears on a screen. You have to have a more conservative approach where you put everything together. And please, please, please do not plow into all these stocks at once. I used to make this mistake when I was younger. I'd say, I have all these stocks on the screen. I'm just going to buy them all. And before I know it, I'd be on margin, and then I'd lose thousands and thousands of dollars. So you don't plow in and just buy all these stocks that appear on a screen. You got to be disciplined and put a watch list, and then you buy them one at a time as they break out. Okay, that was our section on identifying leadership stocks. Let's go on to the next section.